Hi everyone, welcome back to another lending update with lendpower. This month, I have to say, certainly the biggest news that has hit the market is the RBA cash rate increase from 4.1% to 4.35%. So that announcement has now been made, and what we're seeing is basically the big four banks, CBA, Westpac, NAB, and ANZ has already now followed suit in terms of announcing they are passing 0.25% to their customers, most of them around the mid or the 17th of November. I think Westpac Group will be passing them around Tuesday the following week, so a little bit more. Other than that, a few smaller lenders like ING and MeBank, BOQ have also passed on those 0.25%. So if you are a mortgage owner, it will be good for you to find out what your new interest rate will be and check out what the new repayment will be, as it will have an impact to your finance and your monthly repayment. As we all know, at the moment, Australians are starting to feel the brunt of the heat, especially with, the CPI, everything is going up, unfortunately, and mortgage repayment is one of the biggest factors. So find out what your new repayment is from your lenders. Make sure you factor that into your household budget calculation. If you are struggling, obviously the first step should be checking in with your bank to see whether you can negotiate for a better interest rate. Sometimes just a phone call would slash you up to 0.5% to even 1%, depending on where you are at that point in time, right? So that would be the easiest way. But otherwise, also reach out to your mortgage brokers or someone who's going to be able to help you to provide you some options in terms of what you can do to further improve your household finance. On the credit policy side of things, as we mentioned last time, we touched on in detail about the 1% assessment rate buffer for interest-only repayments. This unfortunately has changed a little bit this month. So what happened was Bankwest was the only lender that was kind of allowing a refinance using 1% assessment rate buffer on interest-only repayment. Okay, so if you're wanting to refinance to interest-only, Bankwest was the only lender that was allowing investors to be able to do this with a reduced assessment rate buffer. However, that has changed. I think they were flooded with too much business. So as a consequence, they have stopped doing this last month. But in contrast, CBA, the big brother, has now come into play in this space. So CBA is now offering refinance to interest only using 1% assessment rate buffer in this scenario. So, it's not the end of the world, but just keeping in mind that there are certainly some policy restrictions with CBA, especially when it comes to people who has big property portfolios like 4 properties or more. They will actually want to see your tax returns for actual investment property expenses, which could break the deal. So just keep that in mind. We would definitely love to see more lenders that comes out with refinance at 1% assessment rate buffer for interest-only repayment. However, we are still waiting right now to see whether more lenders will follow suit. So I'll keep everyone posted when there's further changes on this. Last but not least, every lender is continuing to fight to improve their borrowing capacity. I think pretty much in the last 6 to 12 months, rates have pretty much aligned with each other. The cashback war has now stopped. So most lenders are now playing pretty much on an even field. Okay, so I think moving forward, interest rate is not going to be the most critical factor for most of the people. Well, it is still going to be a key factor, but it's not the most critical factor. The most critical factor with a high rate environment right now is borrowing capacity. Most investors need borrowing capacity to be able to continue growing. And the biggest challenge right now is to be able to squeeze out borrowing capacity. So that's what lenders are all tweaking and looking at ways to be able to tweak that right now to be able to win business in that front. Okay, so as an example, the latest one that we've seen from a trust. So if you're purchasing under trust/company perspective, one of the non-banks has recently came out and adjusted their negative gearing policy in order to be able to factor in negative gearing policy for properties purchased under trust or company as well. So that is a big plus for investors who are looking to improve borrowing capacity on trust/companies, okay? Previously, or in fact, most of the other lenders at the moment still will not take into account of negative gearing when purchasing under trust. So this is definitely great news for investors who are wanting or who are currently looking at purchasing properties under trust, okay? So we do expect that there will be more and more lenders that will be looking at releasing little tweaks like this, you know, whether that's increasing the rental income to using 90%, or, you know, reducing other things to allow that little bit of subtle tweak in terms of borrowing capacity, which would win the deal across to the specific lenders. So again, more updates on those soon as they follow, and I will keep everyone updated. So that's pretty much it for this month's lending update. Just a very quick one to let everyone know and to keep everyone posted. If you are someone who is seeking finance for your investment property or looking at improving your home loan or building a property portfolio, I'm always here to help. Reach out to me on david@lendpower.com.au, and I will see you guys again soon in the next lending update with Lendpower.